So our company Bronson Equity has over 250 million in multifamily real estate assets, and people are surprised when I tell them I'm not really emotionally attached to multifamily. I don't really, real estate is okay, but I don't really have an emotional attachment to it. Well, why is that? It's done a lot for me. But I think it really doesn't matter whether you invest in self-storage and multifamily and gold and private equity, Bitcoin, foreign exchange, options, whatever it is. It doesn't matter what the asset is. It matters what it does for you, right? That means what are the returns? What does it do for tax benefits? What does it do in a recession? Don't fall in love with the deal, fall in love with the numbers, right? And it's true, it will serve you. So if you're looking at just one asset, whether it's multifamily or other types, so maybe it's single family or other sorts of individual assets or gold, it's important that you have an open mind and that you're open to see what else is out there. So we're gonna jump into kind of what I see being some awesome options for today and what I mean by not falling in love with the asset, but falling in love with the numbers. We'll go over it in 3 easy steps, and I got a great quote for you at the end. All right, so most investors think, I buy, this asset, or I buy houses, I buy multifamily, I buy, bonds or stocks. I only buy, this is kind of generally what I do. But the challenge is, and what I've learned in over 1,300 calls with investors, is that people have kind of their thing they're biased to, but it doesn't always make sense in every market to just stick with one plan. And it's good to be open, for one season things can work well and other things they may not. So for example, if you were a bond investor over the last 30, 40 years, you can see on this chart, you would have done phenomenally well. The rates on bonds have come down consistently over time. So if you own bonds or you've owned bonds previously, it just continues to be worth more and more. These older bonds that have a higher payment rate as bond values come down. So you can see it there. But now bonds are not that great anymore. Bonds are struggling, right? Because rates are starting to rise. So that decreases the value of these bonds. Another example is single family, right? Interest rates are rising. We're seeing single family, at least at the time of this video, close to 7% on interest rates for a 30-year fixed, right? 6.8% or 7%. So that means a $500,000 house, if a year ago you had a 3% 30-year fixed on it, including escrow, you're paying $23.53 a month for a payment. Well, now at a 7%, means you're paying $33.28, which is a $1,000 increase. That's 41% more than you were paying a year ago, right? So there's some questions of, is single family a great place to invest right now? I'm not seeing rents rise by 41% in a year. They've risen, but not that much, right? And what happens if rates come down in the future? So that's why actually multifamily still looks attractive to me, because all these people that were wanting to buy houses, now they're not able or they're not wanting to buy a house. So where are they going to go? They're going to go to multifamily, they're going to go to rentals, they're going to go to other things. And so we're watching kind of what's happening in that area. So it is important to look at the asset itself. What does it do for you? Does it reduce taxes? Does it give you other sorts of benefits? What's the time horizon? Does it meet your goals? Can you use a retirement account for it? These are all things that are really, really important to look at. So we're gonna get into kind of what an asset does for you. Okay, so what does an asset do for you? When you're looking at this question of what does it actually do for you, the first thing you wanna look at really is, what are your goals? I mean, are you looking to retire in 2 years? Well, maybe cash flow is gonna be really important to you. Are you looking to just grow your retirement account or grow your cash account? Doesn't the time horizon is not really as important? Well, maybe appreciation will matter. So those are really things. So how does the asset, what does it do, and how does that help you meet your goals? So both of those are incredibly important. If you have one that's a great asset, but it doesn't really get you where you wanna go, then it's not really helping you, right? Or if it's something that, it's got to be a match between those two. So I'm just going to give the example of multifamily. When I examine why I love multifamily, I talk about a lot about multifamily. It's because most people have never invested in multifamily, and there's just some incredible benefits to it, right? So you have this inflation hedge. You can see on this chart here from Mother Jones, shows the line between the correlation between rents and inflation is almost completely correlated. So that means if I own this, there's going to be an inflation hedge. It's going to match generally what rents are doing, what inflation is doing. If inflation is high, and I expect them to continually be high, rents are going to continue to rise, which leads to valuations. So again, rents rising typically means that the value of properties such as multifamily will rise, right? So I love that inflation hedge component. There's tax benefits. You can defer or maybe eliminate taxes. We have some other videos about that. Debt leverage, only 20, 30% down typically is what we put on these deals. And we don't need, to have a double in the value. We don't need the property to double. We just need it to go up 20 to 30% because that's how much we put down on the property, right? So I don't need to have just some huge gain in the value of the property. I only need 20 to 30%, and now I've actually doubled the equity in the property, which is awesome. So the ability to be debt levered is huge. Cash flow, it actually pays you to hold it. There's some assets that you just hold and they don't really, I invest in precious metals, which are great, but they don't pay you to hold them, right? You're kind of just using that simply as a hedge, but there's really no cash flow. So this offers cash flow, offers higher returns generally than the stock market, and there's a lot less volatility in multifamily than the stock market. So that's just one asset, right? So I went through some of the benefits that I'd have to look at and see, well, does cash flow or less volatility, all these things, does that fit? Now this fits most investors, but for you, you may have a special situation. And so that's why it's really important to define what your goals are, what it is you want, because as you define those things, that will really help you to find the right asset. So again, looking at, is it cash flow, is it capital appreciation, retirement, all those things are very important. So last thing is, how do you evaluate an asset, right? Well, I think one really important thing to look at is to look at the downside, right? Don't just look at, hey, these are all the things that can go well if everything goes great, right? But there could be some serious downsides. And it's so important. Warren Buffett says, rule number one of investing is don't lose money, right? And rule number two is don't forget about rule number one. So he's just saying, hey, you know what? Whatever you look at the downside, because if you lose money, it's going to slow you down a lot. And I'm not saying you shouldn't lose money sometimes or something's not there, but there's an example of an investment I'm looking at right now in the energy space, and it has a potential 100 to 300x. That means for every dollar invested, potentially could become $100 to $300. And I see the downside as being, maybe a break even or a small loss. But to me, that's an asymmetric return, right? There's a low downside and there's a super high upside. So when you look at that, always look at what your downside risk is, what is acceptable risk to you, where does that fit within your portfolio? I personally think having 5 to 10% of your assets in something that's a little more speculative, that has the potential to go 10x or 100x, I think could be huge, because that could be life-changing for you. I've seen people do it. I've seen them invest in different deals, and then just their life is different because of that, right? So be open to that. And then also, like I mentioned, we have our ATM machine fund. It's a different type of investment. It's higher returns. It's no leverage. It works well for retirement accounts. So when you look at different investments, look and see, again, how does it meet up with your goals? So I don't mean to be a broken record, but it is really, really important. And it's important that you understand how it works, that you understand, when you get paid, how you get paid, what the risks are, read the PPM, read the statements. Sometimes they're long and tedious, I know, but just try, especially when it comes to risk factors, make sure you understand how something could go wrong. So again, don't look necessarily just at the asset, look at the numbers and fall in love with, not with the deal, but with the numbers, and see if they make sense for you. So Warren Buffett, I talk about Warren Buffett a lot, but he's an amazing investor. He says, if you don't find a way to make money while you sleep, you will work until you die. So my hope for you, friend, is that you do find a way to make money while you sleep through some sort of passive investment. There's a lot of ways to do it. One way, if you're interested, I talk about it a lot because I love it right now, is our ATM machine fund. It's not currently open at the time of this video. We usually open it 2 to 3 times a year. But if you want to just learn how that works, check out this video up here that just talks about ATM machine investing. I'm super excited about it. I've invested in it over the years and then brought some of our investors to it recently. And if you haven't joined our investment club, we're doing things in the multifamily space that are super exciting, the ATM space, some alternative energy stuff. But we'll start a relationship with you. We'll have a call. We'll see if it makes sense to work together. But you can go to the link below or our website, brownsonequity.com, and click the join button. But appreciate you taking the time to educate yourself. It says up here, invest in yourself, because that really is the best investment that you'll make. So we'll look forward to seeing you on the next video.